more than a decade of the commencement of organized retail in India, I think the big problem a lot of retailers, both large and small size, continue to face is with regards to profitability. Perhaps it's to do with deep discounts not translating to what's happening with your bottom line. Perhaps it's to do with the fact that rentals have been extremely high, maybe now beginning to ebb a little bit, but business has been tough. There's no two ways about it. In the face of increasing competition as well, sustained cost pressures that I just talked about, and the constantly evolving customer or consumer, there is a need now to create some kind of differentiation, and that's never been as important as it is today. On the one hand, you have the omni-channel capabilities, something that we've been talking about and really is the essence of this conference over here. And on the other hand, there is a need to drive higher revenues. Customer loyalty, of course, which I think many of our speakers today will talk about, continues to be a myth in the Indian retail format. So the question is, what is profitability really? It's also perceived very differently by various different retail businesses, conglomerates, standalone retail chains, upcoming online retailers. All of them tend to interpret profitability and growth in a very different way. But the main question, or the moot question, is what is behind the pressure that we are seeing on the bottom lines at this point, and really what can be done to alleviate the kind of pressure that many Indian retailers are facing. So we now present Anurag Mathur, Retail and Consumer Goods Practice Leader with PricewaterhouseCoopers India. He's going to be talking about the metrics and the macro environment that we live in right now and what really is impacting profitability in Indian retail. I might add, it's an IRF exclusive, so very proud and happy to present Anurag talking about what is driving profitability and growth in the Indian retail industry today.
Thank you very much for that. I think, good morning, everybody. I think the start of a very interesting session. We've clearly heard about India's potential to become a retail hub and become the next big retail destination. But I think the key question, given the decade or a little over a decade that Indian retail has been coming of age, the question that troubles all of us is that, are we really on the path to profitability? And as retailers, are we ready for that profitability? If we really, this year we went behind this discussion on profitability, and we said we'll do this along with IRF, and went and interviewed a very large number of retail leaders across e-commerce as well as brick and mortar retail to try and understand what is really, is profitability on their mind, how, or is it really just about growth, and what is really driving the Indian retail industry right now. So I think if you see over the last 6-7 years, clearly the profitability has been elusive for most retailers. It has been up and down a little bit, and looking at about 2% in the current numbers. If you compare it to global standards, clearly we are still far behind in terms of what we can get as a potential. And given that, it's not very surprising that a very large number of retailers actually said that profitability was number one. 39% of them claimed that was number one on their agenda. There has been some degree of consolidation in the recent past in the industry that we've seen, and there is expected to be some more. At the same time, there is a very large drive for growth. So not surprisingly, again, the second largest factor is the search for new geographies, new growth, new stores. But balancing these is, I think, the trick that most Indian companies are trying to play with. Well, and I think we just heard about the Indian Kirana being somewhat the bastion of Indian retail. And frankly, it still remains on a standalone basis, probably one of the most profitable models that you can, that you have in the local business, largely because costs being very, very low. What we see between here is really what an Indian Kirana really looks like. The cost structures being low, gross margins being low, eventually profitable, but very difficult to grow beyond that one store. Typically owned retail, not moving out, manpower costs are extremely low, compliance and supply chain non-existent to a large extent. There is still about a 7% growth expected in the overall mom and pop retail business, but individually fairly not so much. If you look at brick and mortar retail, clearly we are seeing a significantly low but profitable model. There is, cost structures are still somewhat high. However, I'll talk about that a little later. Clearly, brick and mortar is focusing on revenue throughput to drive profitability and not really cost efficiency when you look at it. If you look at online, and again, brick and mortar expected to grow pretty fast, at least to the tune of 30% plus growth in that business that we are expecting over the next couple of years. We are seeing from the current numbers to 2020, organized retail will probably go into about 70 billion, about 24% penetration, probably half and half between online and e-commerce. The third one, of course, online retail. The critical piece there is when do we move these bars above the line? Clearly the gross margins are short given the discounting, given the pricing. However, the pace of growth that they're really able to drive with that is far ahead of what any of the other channels or any of the other countries in any part of the world have been able to drive with e-commerce. We are looking at 70-75% kind of CAGR numbers, and some would say those are conservative estimates of where the online retail business is going to go. The cost structures of all three of them are very different between organized and online retail. When you see the cost structures just as numbers between gross margin and the operating margins, not very different. However, a lot more time spent on technology, supply chain, and acquisition by the online guys as compared to what you see on the organized retail. So in that context, really, we went behind understanding.
Hi, so I'm Ankit Jain from Ask Me Grocery. I just want to understand that the difference between this gross and the operating margin for the mom and pop retail, what really takes off this 10%?
Well, there is a fair bit of cost. Most of it is, you can say that it's imputed to the extent of be it manpower, be it rental, be it the base technology or supply chain that they deploy. All of it is really, if you look at it as a completely owned store with the promoter running it and requiring no limitations, then you can potentially expand that much further. But in most cases, you put an imputed rent or put an imputed take home to the manpower who exists, or at least promoter, and which is where really the cost bundles are moving. And there is, again, there is shrinkage, pieces of which that you see here. So that is really the 10%. It is still significantly lower than what you see in the other two, and we can discuss a breakout of it in significantly more detail. And
seems higher given the heading mom and pop retail. So seems higher to me.
Sure. Again, these are, when you look at it on a base of 6 million stores, it is always difficult to say that what would be the exact profitability store to store. These are more indicative numbers to that extent. So I think we went behind with this, trying to understand what is really on the minds of the top retailers and how are they really looking to drive profitability. So I think before we sort of went behind to get into the profitability numbers, the question was really to say that what are the big trends? What are the things on their mind from a trend perspective? What do they see as what is driving this change? So I think the first couple of trends, and a lot of these, most of this is actually a part of the retail profitability report that we are launching today, and at the end of this session, we'll sort of have it available to all of you, and it's available outside as well. So I won't go into the details of a lot of this in now, but really the big trends that you see are the consumer clearly, as we know, is evolving very, very fast. He is looking for a frictionless experience, seamless, that we've been hearing about, but also a very real experience. He is much more in control. Clearly, he is deciding who he is connected to. He is deciding where he wants to move, what time he wants to shop, where he wants to shop. But given all of this, he is not looking for if I can say, unreal experience where he expects something that he doesn't really find in a store, or he gets something on social media and gets something completely different in store. He is looking for it to be very, very real in where it is going. They are still very, very fickle. He's driven by social media, driven by the next status update, driven by the next big thing or the next big discount. Consumers are moving very, very fast between different activities, events, stores. There isn't really a big loyalty drive amongst any of the consumers that any retail is seeing. Most of the big box retail, in fact, is seeing very, very low loyalty percentage numbers as compared to what global average is. The other big thing I think we are starting to see is a desire to pay for services, or desire to buy services. When Best Buy launched Geek Squad many years ago, they didn't expect in their eldest imaginations that it will become a several billion-dollar business going so fast. Today, some of the biggest e-commerce retailers in India are expecting 20-25% of their revenues to actually come from services over the next 2 to 3 years. So services is really growing as a very, very large part of the business. The other two pieces you look at are, on one hand, you're seeing these large discounters in the online space, the equivalents of big box retail in the online world. On the other hand, you're seeing the emergence of very many hyperlocal models, very curated, very localized, very customized. And in fact, that is where a lot of retail feels that their next threats will come from. I mean, as Indians, we've always been used to this kind of customization, right? I mean, the kirana has been hyper-servicing, has been hyper-local, has always been very, very sensitive to our needs. And today, there are more and more models out there who are actually using this, going and understanding a locality, going and understanding a housing complex, and going and customizing products to their needs and offering them on a very, very regular basis. And that is what will sort of drive the next level of competition. So on one hand, you have to be sort of fighting this gigantic cost bucket of discounts. On the other hand, you have to really try and get your services more and more local in nature. I think also the role of the store and the role of the employee clearly is expected to change. We have all heard and talked about experience stores. I think that is something really that is happening now. There is more and more investments that people are expecting to go behind training, to go behind employees, and build behind that. Also, the entire supply chain ecosystem is expected to change fairly dramatically with the onset of GST. If not, there will definitely be a revaluation of all supply chain contracts, be it sourcing, be it networks, be it warehouses, be it distribution, with the onset of GST. And that itself will drive a fair amount of, if I can say, change or opportunities for change in the industry, given that in the last 2 to 3 years, we've seen a fairly new set of infrastructure that has been set up and running due to the onset of e-commerce. Again, selective footprint. I think the other big thing that we're seeing is that with more and more data being available about tier 2 and 3 cities and smaller cities, clearly that could be a driver that people are looking at to say, can we, now that we understand these consumers better, can we set up more and more stores there? Can we build more and more new high streets emerge in some of these tier 2 and 3 towns to say that, to drive the business? And of course, I think last but not the least in all of this, what the big worry on people's mind, and which is called out as a trend, is how do you manage risk? I mean, from an online perspective, you're going into these C2C models with millions of sellers on one side using your brand name. You're going into the space where you have, millions of megabytes of data passing through your systems every day, sensitive customer information. So managing that risk and from a security as well as cybersecurity standpoint, that is clearly something that will become more and more critical. Security standards will keep getting tougher and tougher. I think what we are seeing also is, I think after all of this discussion, we spoke to retailers and said, what is really the challenges that you're seeing? And where is it that your focus is being driven? Is it, the access to capital? Is it loyalty? Is it, what is it? So the biggest answer that you see, more than half the retailers, they feel the challenge today is creating differentiation. To say that to have a separated, unique proposition, be it a product proposition, be it a consumer proposition, with the kind of intensity that is growing, with the entrance of many, many new players on a local basis, on a national basis, really the boundaries between retailers, and especially the multi-brand retailers, are feeling the pinch of saying that what do we really stand for, and what is it that we need to be standing for separately. So creating differentiation clearly is a big aspect. Almost 53%, more than half, have in the last 2 years thought about changing their operating model, driven largely by consumer behavior. Looking at saying that do we move from what we are to being somebody completely different? Well, a lot of them are down the path already and they are evolving. So we might see a bit of a hybrid or a mixed model emerging from where they are. The bigger players are looking at omni-channel retail. Many of them are looking at saying, why can't we just tie up and collaborate with suppliers and start to become a much more nimble local retail business? But there will be, these changes will be visible, and a very, very large number is clearly looking at it. I think the good news to my mind is that we understand that Indian retail throughput is clearly behind global levels. And when you talk to these, when we spoke to all of these retailers as well as the e-commerce players, the focus of profitability in the drive to profitability is nobody is going cutting costs mindlessly. The focus is clearly on revenue. Revenue throughput is significantly the larger portion of where they are looking at. Even within that, if you look at the biggest bucket that they're talking about is improving the value proposition itself. Of course, with prices being available easily, as I spoke about earlier, the customization being available easily, there is a very large chunk of value being delivered by much of these smaller, nimbler players. So defining, and it extends from the entire differentiation piece. What is the overall value proposition that you're driving? That has become clearly very, very important. I think on the cost front, clearly, real estate comes up every time in the conversation without a doubt. Real estate in India is expensive, is known fact. As compared to our throughput, it's even worse to some extent. However, I think what we saw was that the focus, most retailers also understand that the control on real estate is to some extent limited. A lot of them have actually gone through a fair amount of renegotiation over the last year. However, the quality of real estate also continues to remain a big challenge. And given that, I think, and given the change in the value prop, the kind of store, the big things that people are looking at saying is that can we focus our cost efforts on the manpower side? Can we really get the right manpower? Can we get the right number of manpower? So on the cost side, I didn't think was that a lot of discussion really is on the manpower side. So I think given all of these, the question really behooves us is that what do retailers really do to drive profitability in this age? And I think these are 6 observations, I would say, that we have put out based on some of these discussions and our experience. Number one is really around, I think the consumer's changing very, very fast. If I can say, the battleground has really moved from the point of sale to the point of discussion. And I think we talk about social media a lot. We talk about being present, being controlling, contacting. But I think the question is really how many of us are acting upon building a genuine social media, or if I can say today, media strategy that not just is about media and communication, but about driving consumption or driving purchase from that point of sale. And it is not just about saying that walking into a group and just understanding and putting an ad over there, or getting your brand message over there, but really understanding what are the local consumer trends. I mean, if a movie is launched and it's being discussed on social media, the local retailer will actually go pick up a Bajrangi Bhaijan keychain and put it up on his store shelf. How many of us are doing that and reacting to it in that manner? So I think the question is, can we understand these points of discussion, look at the opportunities, because those are what can drive up margins for the local kirana store to that extent. The second is, again, defining your value proposition, ensuring it stays relevant on a very regular basis. I think the important part here is about exclusivity. Clearly, whether you look at big online retail, whether you look at the likes of Flipkart driving a Xiaomi, whether you look at Snapdeal driving up with a Micromax, or whether you look at any of the bigger retailers trying to drive their exclusive lines of business or private label down many of the chains, it is about driving what you stand for, what is exclusive to you, and what the retailer, what you can be attached to. And it's not just about product, but also the differentiation of what you qualify and provide as a service, or the promise that you provide. And ensuring that it's relevant on a regular basis clearly is very, very important to people. Making the experience fast and seamless, without a doubt. It has to be local, it has to be fast. People are not willing to wait. Now is too late for most people. It has to be fast. I mean, what we see here is the need for possibly much greater collaboration with one, with the local retail, two, with the new ecosystem that has emerged. I think with the emergence of e-commerce, what we've seen in the last 2-3 years, the last mile infrastructure being deployed, the onset of many last mile companies and logistics companies, tons of private equity money going behind setting up some of those logistics players. There is a lot of infrastructure now out there waiting to collaborate with almost traditional brick and mortar retail, if I can call it now. It's still being used largely by the e-commerce guys. The fourth one is really driving decisions through continuous analytics. I think we all have technology systems, analytics that we've put in place. But I think the key question to again ask ourselves here is, are we giving the right people access to the right data to drive some of these decisions? Does your local store manager have understanding of what is driving business in his point of sale? In his, what is the social media analytics saying for his locality, for his area, and what is changing over there? Rather than saying that you have it on a big box basis, there is a war room setup that is looking at fancy charts of how, what are the kind of percentages moving up or down, what is sentiments moving up or down. The people who actually have to take action in it, do they have access to it? And are they embedded in it? I think that is really the question around driving better analytics for local business. Again, what we see on the technology side, moving from a significantly more large platform solution to very pointed solutions. Investments in technology will get accelerated without doubt. However, will it, and with technology changing so fast, a lot of people question whether the returns are really there on changing some of these. But we believe the returns are there, and in fact better than ever before. However, it has to be pointed. It has to be sharp. It has to be towards a specific outcome, not just in large enterprise solutions or large solutions. Yes, they form the backbone, but the ROI is coming from really pointed solutions. And that is what is driving a lot of this. And lastly, I think I spoke about clearly build a risk strategy. There is, I spoke about with the onset of the entire C2C model, with the large kind of data that you have and possess, there is a genuine risk to the business that all of us need to foresee and plan for, and make sure that there is a mitigation strategy in place for a lot of that. Yeah, so I think that is pretty much what we had. We have this report out and available on the images retail stall, and we'll also get it distributed towards the end of the day to make sure that all of you have access to a lot more. And of course, we are here through the next 2 days to make sure that we have some interesting conversations, including the Kirana retail. Thank you.
You to stay on stage, Anurag, for another 2 minutes, just in case there's any questions, because this was a fairly interesting report, both in terms of the strategies that were talked about, and I think someone here had a question about the Kirana store versus the other stores and that deep dip or almost inversion in margins. So if any of you have a question with regards to the report, please feel free to raise your hand. We'll get a mic to you. Could we get a mic to the gentleman here, please?
Hi. My name is Pawan, and I actually represent a FMCG brand, Amul.
Yeah.
Now tell me, I am familiar with the challenges that organized retail is facing in India today. And at least in the FMCG space, one of the challenges being, and something unique to India, is MRP.
Right.
Right. So with the MRP regime in place, how do you think organized retail is ever going to get profitability?
So, interesting for sure. I think the question is that, are we leveraging everything that we have within the existing MRP regime? So, are we really maximizing as retailers as well as consumer good companies the opportunity that within that MRP, we can do? Are most of our products selling at MRP? Can they sell lower? Can they drive business? I think how many of us can really say that within the MRP we have maximized or understood what promotions to drive, where to drive? I think over the last 3 to 5 years, there has been a fair amount of investment in trying to understand that, go down that path. But really what you see in action is still fairly limited. I mean, there is a very large belief around saying that, people still take the best decisions. And, I was reading an interview with the Amazon China CEO very recently, and he said, I don't remember the last time I fixed price. It was technology that was fixing the price, because of the fact that you have to start believing in some of that and seeing the drive towards that first. And once you have that, I agree with you, yes, there is potential clearly from moving towards an RRP regime and trying to building much more profitability on top of that. But we feel at least there is 2 to 3 percentage points of profitability that is sitting simply in revenue management, promotions, pricing within the MRP regime.
Thank you for that, Anurag.